Today we will learn about the LATAM localization for Microsoft Dynamics 365 Business Central. It is a solution designed to integrate companies from different countries in the same productive environment. The objective is to have a tool to enable us to operate with intercompany functionality between different locations, while at the same time ensuring compliance with country-specific tax laws and regulations. Specific laws and regulations in each country. One of the interesting advantages of this solution is that it can be customized for each company and country where you are operating. This ensures that you will only receive the localization you need without affecting the other companies that coexist in the same environment. For the example, I will use 3 companies. The first one is the Colombian company with settings specific to Colombia. When activating the localization in this company, it will bring me functions and fields specific to the Colombia localization of the Colombia localization. Each of the localizations of the different countries that make up the production environment will have its own parameterization and its own configurations. The second company will be the Mexican company located in Mexico with the Mexico localization. When activating the Mexico localization, you will have fields and functions specific to this country and functions specific to this country. And finally, I am going to use a parent company located in the United States without localization. This company will be used to consolidate the financial statements. Similarly, if we use one of the different countries to consolidate our financial statements, we could also do it that way. In this case, I am going to use a third company without localization to consolidate the different financial statements. We return to the Colombian company. The first thing we are going to do is to make a purchase invoice to get to know the different fields and functionalities of the Colombian localization. To do this, we are going to enter the purchase module to a purchase invoice. Select a new purchase invoice. Fill in all the supplier information. In this case, it will be a national supplier in order to be able to apply the different withholding codes. I'm going to type in what would be the invoice number, and we are going to select the products and or services. For example, 1,000 units. Here we can create as many concepts as we need. For the example, I have 2, but it can be 5, 10, 15. The different concepts of withholdings in each of the sources, VAT withholding and ICA withholding, as many as we want. Here we are simply going to indicate to register to indicate later the preview. And check the effect that these movements or these withholding concepts have on my accounting and in the different modules of Business Central. We are going to enter VAT movement. Here I can visualize the calculation that the system makes depending on the different concepts. For example, here I have the withholding at source that its base is 52 million with its amount that is 1,820,000 and its percentage, and in the same way I have the VAT withholding and the ICA withholding, and it also shows me the value added tax, the 19%, showing me its base and its respective tax percentage. Now we are simply going to register this invoice, but not before mentioning that we can also issue a supporting document by simply activating the supporting document checkbox, and this invoice becomes a supporting document that would be ready for electronic stamping of this supporting document. We click on register, and this purchase invoice remains in a purchase invoice history that I'm going to enter from the purchase module And here I can visualize all the invoices, and the ones that correspond to the supporting document will be marked. Other types of documents that we can issue with localization and that Business Central does not have a standard are purchase debit notes and sales debit notes. Now we are going to make a sales invoice to a foreign customer, in this case to a customer in Mexico, and we are going to do an intercompany transaction. And we are going to do an intercompany transaction to visualize how they behave. That would be different countries or different locations behave in the same production environment. Now we are going to make a sales invoice to a foreign customer. This customer will be the Mexican company that are connected by the intercompany module. Let's remember that we are in the same productive environment. I'm going to make a sale from the Colombian company. And that sale will be to the Mexican customer. That sale to Mexico will be a purchase invoice that will be connected through the intercompany module. We are going to enter the sales module, sales invoice, a new invoice, and fill in the data corresponding to the transaction. We select the customer. In this case, it will be Kronos Mexico. We fill in the rest of the informative data and select the product or service. The product or service, let's put in 120 at a price of 350 Mexican pesos. And we notice how the currency would be Mexican pesos because it is our customer's currency, okay? A different currency than the one we normally use for local sales invoices, which is the currency of Colombia. Here, look at how select already brings me by default what would be the currency of Mexico. In addition to this, we must fill in the following data. Is, for example, the type of operation that is required for electronic stamping. I will select the 10, which is the standard, and I must also add the Incoterms rules and select the CFR. And I will also select the form of payment. In this case, it will be bank. And let's remember these concepts or catalogs. And let's remember that these concepts or catalogs have their relation with each one of the DN catalogs. Okay. Once we have made the invoice, we simply indicate register, and automatically registers the invoice, and it creates a movement for me, which is the CTT41 or the CTT41 invoice in the Mexican company. Okay, I have the direct connection. That is to say, once I execute and process the sales invoice, it automatically creates a purchase invoice in the Mexican company through the intercompany module. Okay, and this synchronization may be different. It may need an approval or some other way, because it could also be achieved, or another way this could also be achieved. Let's accept, and it tells me if I want to view the invoice history. I say no, and now I go to what would be the history of sales invoices. And from this section, I can already make the electronic stamping. How can I do it? We indicate start send to electronic stamping, and the system builds the TXT that will be sent to the technological supplier. The technological supplier has the connection with the fiscal entity, and automatically, once the client approves, it sends the invoice back to us. The stamping, I indicate to accept, and it tells me that the stamping was successful. Okay. Here we have the CUFE, the electronic date, and others also. For example, if we want to see the different withholding reports, and other reports of the localization in Colombia, we will also have the different withholding reports. Now we go to the company Mexico. You can see its name here. This is the company. This is the same company in the environment at the productive environment. It is a Mexican company with its own configurations in Mexico. We are going to indicate purchases, and we will go to purchase invoice. Here in purchase invoice, we go to organize, and here we created the invoice from the client. In this case, for Mexico, it will be a supplier. The supplier is Kronos Colombia, and we created the purchase invoice ready to review, add taxes if necessary, or complete the information of what would be the Mexico configurations. Okay, for the example, I can leave these withholding concepts, may not apply because the transaction is with a foreign supplier, and possibly the withholdings would not apply. But for the example, we can leave the aggregates. We indicate a preview, and the system shows me what the calculation of these withholding concepts would be. For Mexico, showing me the base. In this case, not done. Once we pay the invoice, this tax will be done, and it shows me what would be the amount, percentages, and then it shows me what would be the amount, percentages, different accounting movements, which basically is the distribution of the amounts to each of the accounts cut. Once we finish the audit, we simply indicate to register, and in this way we complete this process. And in this way we complete the process that started with a sales invoice from Colombia, which is the same company that is in the same production environment, connected by intercompany with the same company in the same production environment, connected by intercompany with this Mexican company, and in this way we complete the time. We indicate no, and we go back to the beginning. Now we go to the parent company, that consolidating company, in which we are going to generate what would be consolidated financial statements and consolidated reports. Well, this parent company located in the US is going to integrate or consolidate what would be the companies of Colombia and the company in Mexico and the Mexican company. For this example, let us remember that it can be the companies of each one of the countries of the different locations. The first thing I am going to review is the catalog of accounts. And from this section, we are going to relate the accounting accounts of the parent company versus the accounting accounts of the subsidiaries. We are going to deposit to account 12,130, for example. We deposit to what would be the consolidation tab. And note how we have the consolidated account in debit. We place the pointer and read briefly the description. We have the relationship between the US dollar account and the US dollar 12,130. If we go to what would be the company in Colombia, we also have that they are synchronized by means of that accounting account. Now we go back to our parent company, and we are going to execute the following process. Financial statement consolidation process. And we go to the business unit. Okay, in the business unit, we are going to consolidate what would be the financial statements and all the amounts of the accounting accounts of each one of the companies. We are going to enter, for example, Colombia, to the synchronization with Colombia. We are going to indicate actions, and we are going to indicate a test database so that we can visualize which are the accounting accounts that are going to be synchronized. Then we are going to select the period. I will select the entire year 2023 up to the present date. We are going to indicate the company. We are going to give it a preview, and here what we are going to visualize is that US parent company versus individual countries or locations, whether it is Colombia or Mexico or the ones we have integrated. Here some of them will give me an error because they are blank, and others are going to be that match. Here we are going to expand a little bit so that we can observe. We are going to make this match with each one of the accounts. Here we are going to show me what would be the consolidated account. And here we are going to be able to visualize, let us say, all the accounts that are making this match. Some of them are going to be blank, others with values, like this one. That's it. Now we are going to generate what would be the synchronization. We are going to indicate actions to it. Execute consolidation. We place the document number, and we indicate to accept. tells me that it is going to show me the consolidated trial balance. To select the period, we are going to work the period. Amounts in thousands, and we are going to indicate a preview. To be able to observe this consolidated trial balance, then notice how the system shows me. The system shows me each one of the accounts that have been consolidated. Okay, here we can see, once we have audited these movements and values, we go to what would be the accounting account. And for example, we are going to enter here jump, and here we have what would be the movement given by the document number, and where the description is also shown here. It tells me that 11,000 in 100% of the integration, and it shows me the respective amount. And so with each one of the accounting accounts, for example, we are going to enter intercompany, and here we are going to be able to observe all the synchronization that made, because with what would be those companies here showing me all the information, and import. This way we finish with the presentation. And finally, I invite you to like the video, subscribe to our channel, and activate the notification bell. Also, if you want to know more about who we are, what are our products and services, I invite you to visit our website, in which you will find information about our products, such as LLB retail, different locations, both integrated, such as Latin America, and individual trainings, webinars, and much more. Thank you, and see you in a future video.